Bitcoin is a decentralized digital currency that has gained popularity over the years. It offers a fast, secure, and inexpensive payment method compared to traditional banking. In this paper, we will discuss Bitcoin transaction fees and compare them to traditional banking fees. We will analyze the factors that affect Bitcoin transaction fees, how they are calculated, and how they compare to traditional banking fees. Bitcoin transaction fees. Bitcoin transactions involve a fee that is paid to the network's miners to process the transaction. These fees are not mandatory, but they are recommended to ensure the transaction is processed quickly. The fee amount is calculated based on several factors, including the size of the transaction, the demand for block space, and the priority of the transaction. Transaction size. The size of a Bitcoin transaction is determined by the number of inputs and outputs. The inputs refer to the Bitcoins being spent, and the outputs are the destination addresses for the Bitcoins. The more inputs and outputs a transaction has, the larger the transaction size, and the higher the fee required to process the transaction. Demand for block space. The demand for block space refers to the number of transactions that are waiting to be processed on the Bitcoin network. When there are many transactions waiting to be processed, the fees increase, as miners prioritize transactions with higher fees to maximize their profits. Conversely, when the demand for block space is low, the fees are lower. Transaction priority. Transaction priority refers to how urgent the transaction is. Transactions with higher priority receive preferential treatment from miners, who are incentivized to prioritize transactions that offer higher fees. For example, a transaction that involves a high-value transfer may be given priority over a smaller transfer. Comparison to traditional banking fees. Bitcoin transaction fees are significantly lower than traditional banking fees, especially for cross-border transactions. Traditional banking fees are charged as a percentage of the transaction value and can be as high as 10%. This means that the larger the transaction, the higher the fee. Additionally, traditional banking fees can be affected by currency conversion fees and other charges, which can further increase the cost of the transaction. In contrast, Bitcoin transaction fees are calculated based on the size of the transaction and the demand for block space. This means that Bitcoin fees are not affected by the transaction value, making it an ideal payment method for large transfers. Additionally, since Bitcoin is a decentralized currency, there are no currency conversion fees or other charges, making it an inexpensive payment method for cross-border transactions. Conclusion. Bitcoin transaction fees are calculated based on the size of the transaction, the demand for block space, and the priority of the transaction. These fees are significantly lower than traditional banking fees and offer a fast, secure, and inexpensive payment method, especially for cross-border transactions. While Bitcoin fees can be volatile, they are still an attractive option for those looking for a low-cost payment method.